Have you ever wondered what happens when the stock market faces a continuous losing streak? What if I told you that Nifty is in the point of phases that has broken a 28-year record of continuous monthly decline? More importantly, why this is happening and what does this mean for the traders like us? So in this video, I'm going to decode the Nifty's sharp decline, its historical pattern and the US impact of the volatility. We will also get deep into the S&P Global report that has triggered the fresh selling pressure. So stay with me till the end of this video because without understanding these movements, you will not be able to make a better decisions. So without any further delay, let's get into the video. Now let's see the Nifty's current scenario. As of now, Nifty 50 is at an 8-month low, a level it has struggled to maintain multiple times. It previously tried to find the support level at 22,800, but on Friday it has crossed below the crucial level, which leads to an increased selling pressure. One of the major reasons behind this decline is the US market instability. Traders across the globe closely monitor this US market because it is getting influence on emerging markets like India. If the US economy gets sneezes, the global market catches the cold. Now Nifty is dangerously close to make a history if it closes in red in this month. The last time it has happened between December 1994 to April 1995. When Nifty declined for 8 consecutive months by making a fall of 31.4%. Similar streaks were also found in 1996, 1998 and 2001. But none of them lasted as long as now we are witnessing today. To put this all in an easier way, let's analyze the past. In 1994 to 1995, Nifty fell for 8 consecutive months, 31.4%. In 1996, it declined for 5 months around 26%. In 1991, 1998 and 2001, it dropped for 4 consecutive months with declines of 28%, 26% and 21% respectively. Currently, Nifty's decline is around 11.7%. But based on the live data, it is now crossed to 14%. However, the traders need to be conscious because the sentiments remains weak. The biggest question is what happened on Friday. Nifty in danger zone. One more drop and it's 28-year record-breaking crash, which indicates that declining optimism in US economy. This was surprising that S&P 500 hit all-time high on February 19th. But still, why did this market sentiment change so suddenly? The data collected in 2025 February pointed serious concerns. The first one is output growth slowdown. The second one is payroll declines, which means that companies are paying less for the employee salaries. Third one, optimism slumped, indicating a negative outlook for the businesses. The fourth one is cost increase, which means that further pressure on the profit margin. These data were collected between February 10 and February 20th, showing the most recent economic conditions rather than the past performance. Now let's see how it affects the traders. Let me give you with an example. Imagine you are a short-term trader who relies upon the momentum. Nifty has been testing 22,800 for the multiple times and you assume that this level will be hold. Now you take a long position expecting that the level will get bounced back. But then the news from the US has triggered a pressure of selling and suddenly the Nifty breaks below 22,800. Now your stop loss got hit and you exited in loss. That's the power of understanding market reports. Key takeaways from this video. The first point, Always track global market events. Even if you are trading on Indian stock market, the external factors like US PMI reports and interest rate decisions will impact your trades. Second point, support and resistance levels are not permanent. Just because a level is held for multiple times, it does not matter that this level will be in hold. Be prepared for breakdowns and breakouts. Third point, use macroeconomic reports to anticipate trend. S&P Global report was a warning sign that the sentiment is going to be shifted. Smart traders will use this to adjust their strategies. Now let's see in the upcoming weeks whether Nifty is going to win the losing streaks. As a trader, you must be informed and adjust your strategies accordingly. An exciting offer is on the way. For this Women's Day, we have special surprise just for you. We are dropping an exclusive giveaway contest. Follow us on Instagram and comment your thoughts for our Instagram video. Best 3 comments will be given 3-month free premium plan. So don't waste your time and grab your opportunity today.
Trading and investing involve substantial risk and are not suitable for every investor.